Let's bring in here Louis Christopher, one of the most experienced housing analysts in the country and founder of SQM Research. Louis, always good to chat to you about housing. Look, there's a bit of modest recovery. There's now forecasts of 4 interest rate cuts coming into the future. Do you get a sense that that could actually see some stronger growth over the course of the next 12 months or so?
Oh, Ross, if we see 4 interest rate cuts, there's no question in my mind we'll see an accelerating housing market. But it must be said that the interest rate cut we had earlier this year has not had an impact upon the market. Yes, it's true, housing prices rose for the month of April, albeit fairly slowly. We note in the lead up to the federal election, auction clearance rates have been falling and sales volumes have been very, very soft. That's kind of normal for the lead up to the election. And I think once the election is done with, presuming we see a majority government, we'll see a boost in confidence in the marketplace. And let's also keep in mind that it's quite likely we'll see an interest rate cut later this month when the RBA meets once again. So I think there will be an acceleration in the market. And yes, if we were to see 4 interest rate cuts, no question we'll see an acceleration in the market.
So one thing that I know that you've watched for a long, long time is just the movement of population. That's either intrastate population, people moving, say, from the southern states to Queensland or maybe to Western Australia, but then people coming in from overseas, with both parties saying they would actually sort of quell population. Does that have an impact also on the outlook for property?
If the government actually acts on their targets for the cuts in immigration, then potentially you would see a slowdown in the market. But that's a big if, Ross, because so far the track record of hitting migration targets over the past 3 years hasn't been particularly good by the Labor government. They've consistently exceeded their targets. So it is an interesting question. If we were to see a slowdown in migration, yes, I think that would spell a slowdown in the housing market, not just for prices, but for rental growth as well.
So then take me to the distress, because there's little distress out there in housing markets right now because people have got jobs. It's when people lose jobs, you get a bit of distress in the markets, which you again have tracked over the years as well.
Yeah, that's right. We were actually anticipating a rise in distress listings activity over the course of 2023 and 24, given the elevated interest rate setting, but it didn't actually materialise. So on our numbers, on SQM's numbers, around the country, there's about 5,000 properties selling under distressed conditions. And to give you some perspective to that, prior to COVID, that number was closer to 12 to 13,000 listings. So the numbers haven't really increased. We also monitor the non-bank financial sector, and we're not seeing any major rise in arrears or banking defaults. So overall, the market has largely handled the elevated interest rate environment. And if we were to see these cuts in interest rates, I think you would see even less distress activity out there.
Indeed. I'll tell you what, Louis Christopher, always great to have in the program, one of Australia's leading housing researchers. Many thanks.